Today, crypto prices end the week higher as we enter a historically strong month for the crypto market. Genesis settles an SEC lawsuit over its role in the Gemini Earn lending program. And we take a deep dive into what it'll take for the new spot Bitcoin ETFs to survive in a crowded field. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto assets finishing the week on an up note. By noon Eastern, Bitcoin rose more than 1%. It's trading at about $43,200. ETH inched higher to trade at $2,300, and Solana rose nearly 4% to the $100 mark. For the week, crypto prices are in the green, outpacing the S&P 500, with Bitcoin up more than 3% and Ether trading higher by 2%. Solana, however, soared nearly 9% this week, and those are all by around noon Eastern. Now, that $100 level is key for Solana. It's been poised for a breakout above that level to new highs, according to Wolf Research, along with other altcoins. They've been coming on strong in recent months, and chart analysts expect them to outperform near term. Now, February is a historically strong month for both Bitcoin and ETH. Bitcoin has finished 9 of the last 11 Februaries in the green, and ETH, which hasn't been around for as long, has finished higher in 6 of the last 7. But Bitcoin could see a little more consolidation here over the next month or two, analysts tell me, although there's not much to worry about in terms of its longer-term uptrend. Meanwhile, Ether and altcoins are poised to take the limelight in the next few weeks. ETH had a very active January. You saw those outsized rallies after the Bitcoin ETF approval, but it really didn't get much attention. Standard Chartered predicts it could rise 70% from current levels if it has the same pre-ETF uptrend that Bitcoin did. Okay, let's talk about the top stories. Crypto lender Genesis has settled an SEC lawsuit over its part in the Gemini Earn lending program, agreeing to a $21 million fine that will be paid only if Genesis is able to fully repay customers in its bankruptcy. According to documents filed in bankruptcy court on Wednesday evening, the settlement will allow the lender to focus on repaying customers and other creditors. It will also help it avoid the costs and risks of defending itself from an SEC lawsuit. The week before Genesis filed for bankruptcy in January 2023, the SEC sued the crypto lender, alleging that it and crypto exchange Gemini illegally sold securities to investors through their jointly managed crypto lending program, Gemini Earn. Genesis did not admit or deny wrongdoing in the settlement agreement. We reached out to DCG, the parent company of Genesis, for comment, but didn't hear back right away. Up next, Binance froze more than $4 million worth of Ripple's XRP tokens tied to this week's more than $110 million exploit. That's according to this X post yesterday from the crypto exchange's CEO, Richard Tang, where he noted that the exploit was flagged to exchanges. Tang went on to write that Binance will continue to support Ripple in their investigations and their efforts to retrieve back the funds, including closely monitoring the majority of funds still in the exploiters' external wallets in case they deposit to Binance. We told you on Wednesday that the tokens were stolen from a wallet belonging to Ripple's executive chairman, Chris Larsen, who said that there had been a breach to his personal XRP accounts, but not of Ripple itself. Finally, 3 people have been charged by U.S. officials with a SIM swap scam that reportedly drained more than $400 million in funds from FTX. The Department of Justice alleges that between March of 2021 and April 2023, Robert Powell of Illinois, Emily Hernandez of Colorado, and Carter Rohn of Indiana conspired to carry out SIM swaps, then steal victims' money, including virtual currencies. Now, the indictment doesn't call out FTX by name, but Bloomberg reports that the bankrupt exchange is, in fact, victim company 1 in the filing. We reached out to FTX, but haven't received a response. All right, turning to Bitcoin ETFs for our main story. It's been more than 3 weeks since the SEC approved the trading of these new products, including those from BlackRock, Grayscale, and Fidelity. Now, it's a high-stakes battle for market share and customers, a fight that not all of the new funds may survive. Crypto World's Talia Kaplan finds out how the Bitcoin ETF experiment has been playing out in real time.
Check out this list of all the spot Bitcoin ETFs available on public markets. Seems like a lot, right? The SEC's decision to allow spot Bitcoin ETFs back on January 10th created a very crowded market for these products nearly overnight.
This is really the culmination of 10 years of work. Investor support, the Grayscale team, everybody's been working tirelessly towards this outcome.
This is probably the most important moment in Bitcoin's history, or at least in the last 10 years. It's a huge unlock for access to the space. We think it's an incredibly important moment.
11 ETFs or ETPs coming to market on one day. is actually historic for the ETF industry. You haven't seen this kind of level of competition on an exposure day one ever.
Now the ETF providers are looking ahead to figure out how to drive investment in their product over their competitors. One way to do that? By lowering fees. Most of the approved ETFs have fees of between 0.19% and 0.3%, but Grayscale stands out at 1.5%. Speaking with CNBC from the World Economic Forum's annual meeting in Davos, Grayscale CEO Michael Sonnenschein defended the higher fee, pointing to his firm being the largest Bitcoin fund, having a 10-year track record of operating successfully, and having a diversified investor base. Sonnenschein also said he thinks most of the approved Bitcoin ETFs won't survive, and he isn't the only asset manager that feels that way.
I do think a few won't make it, but what I do expect to happen is that financial advisors and other institutions will probably move towards the other managers that they have contracts with and sales agreements with. So that's going to be one of the factors. Typically, the way that advisors and money allocators work is they like to choose 2 or 3 different managers that run the similar style ETF or the same ETF. So usually one bucket is the big manager that everybody knows, which is, like the BlackRocks and the Fidelities of the world. And then the other bucket is usually the niche experts in the space.
We do believe there will be consolidation, but it's going to take time. I feel that almost every one of our peers in the space will give it at least a year. It was a great idea. They saw the opportunity. It made sense, right? This is what every client has been asking for. And so they thought it will be fine. And I know a lot of them have had operational challenges. We haven't, but I think that they're giving it a try. And, I respect that, but I do believe we'll have a much smaller universe of competitors this time next year.
So which are most likely to succeed? Well, Sylvia Jablonski of Defiance ETF says it could depend on a couple of things. 1, having an existing client base like Grayscale could help, as many investors wouldn't want to sell their holdings and take a tax hit. 2, it could simply be a matter of scale and budget. Take BlackRock. The investment giant's ETF just hit $2 billion in assets under management. Jablonski says as long as the ETF provider can break even, they will continue to exist. Another big factor for the year will be the price of Bitcoin directly. Following the approval of spot Bitcoin ETFs in the U.S., the price of Bitcoin shot up above $49,000 and then quickly came back down, trading as low as the $38,000 level in recent days. And the ETFs have followed suit. Since launching, all the ETFs are down between 5 and 8.5% as of February 1st, along with a broad sell-off in Bitcoin and other cryptocurrencies.
I think what happened was a lot of people got excited and tried to front run the ETFs launching. So that drove the price of Bitcoin up a little bit higher than it should have been. So when the ETFs launched, the price of Bitcoin definitely came down following that first day. In addition to that, we're still not seeing the full effects of a Bitcoin ETF just yet. Financial advisors are still looking at this asset class, still looking at the ETFs themselves, and trying to decide when's a good opportune time to put their clients in. I do believe that will be coming in the next 3 to 6 months.
We're very excited that Bitcoin now is in the ETF wrapper and therefore very accessible at very low prices. What we do have, and there was speculation beforehand, will this be a sell on the news? We said yes, and then we were hearing that so much that we thought, well, maybe not. Well, it turns out that FTX is, I guess it's nearly $1 billion in GBTC, has been sold as the Bitcoin ETF has come out. And I think that's been part of the pressure. I do think there's sell on the news because I think some people expected it to hold a little more than it has. But this has not disturbed our point of view at all. We think this is one of the most important investments of our lifetime. We're very happy to be a part of this movement, providing more access to Bitcoin.
These ETFs are also competing to convince people that they're a better investment over just buying Bitcoin itself.
For me, I think the biggest negative implication is that the core promise for me of crypto, of Bitcoin, is this idea of self-custodial products where you have ownership of your own money. That is the whole dream of the technology, is people being in control of their own money. And these ETFs, while they are great, they are the creation of a financial instrument where someone else owns your money, And you have access to it in the form of, this publicly traded share on this stock exchange.
Another potential drawback? These ETFs are limited to stock market hours, while crypto can be traded 24/7.
I think also, as we start to think about Bitcoin, if we do see, huge amounts of investment into these ETFs, there's obviously a scarcity of the underlying asset as well. So that's something we don't need to worry about today, but something to consider on the forward. For me, I think the positive aspect is the breadth of the market that it can focus on.
So what's next in 2024? Now that spot Bitcoin ETFs are trading, all eyes are on whether the SEC will greenlight an Ether ETF. The agency is due to give decisions on those applications beginning in May. BlackRock, Invesco, ARK, and Van Eck are among the firms in line for approval, as well as Grayscale, which is seeking to convert its existing Ethereum trust into an ETF. Now, just because Bitcoin ETFs won approval in January, that doesn't guarantee Ether ETFs will too.
I look at what we did this week as it's cabin to one non-security commodity called Bitcoin. Like we've had gold spot exchange traded products and silver exchange traded products in the past and approved in the past, this is cabin just to that one non-security commodity token.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.